All right, folks, welcome back to the Garden State Growth Show. Today, I'm excited to have on a very special guest, Jay Silverman.
What's up, man?
Jay, what's going on, buddy?
Been a long time.
Not
with you.
Yeah. Just met Greg, but
Yeah. You and I go back a long time.
Yes,
Long
sir.
time. We're finally
Back to
doing
the
something.
Atlantic City dusk days and
Dusk days.
Chelsea,
Yeah, oh my God.
Jimmy Richards,
Jimmy Richards.
Dennis Picone,
What characters? I hope they see this.
Sean.
Sean. He's very much.
What's his
involved
last
in my-
name? Wolf.
Wolf.
Yeah,
Wolf,
I
man.
knew it. Love
Yeah.
Shout out to Sean Wolf. I
Yeah.
don't know what he's doing. We'll find out.
We'll find out. We could go there.
Well, yeah, we'll have Jordan, have him call in.
Yeah.
Have Sean Wolf call in.
We should.
So right now you're doing something called CJ Investment Group. Give us a little, overview of what that is.
Yeah, so CJ Investment Group is my development business, real estate business,
Okay.
focused on boutique development. Right now, I'd say 75 to 80% of our business is on the luxury condo development side. The market and where I live and where we found success is the Hudson County, Jersey City area.
Okay.
So a lot of the deals and our resources over the last 5 years of building our team out, it's made sense to just build out our business there.
Jersey City.
Jersey City, Union City, Weehawken, Hoboken,
Okay.
that market. We've done a bunch of deals over the last 5 years that I've been partnered with Chris, Jay, CJ,
Okay.
Investment Group, and so we're a small firm, but we handle quite a few deals, but we're definitely more focused on the boutique side of things, luxury product, premium design, and we're not trying to do anything builder grade or cookie cutter. It's not really our style.
Yeah.
So we're going for, I would say, these days $1 million home is kind of a starter home. But
I know it's sad as that is.
but I would say $1 million plus is
Sure.
the majority of our products.
And what's your role at that company?
So I mainly handle investor relations. So whereas Chris is deal finding, analysis, handles a lot of like the material ordering and things like that on the back end, the admin stuff.
Project management.
Yeah. We have overlap as well because we
Yeah.
wear many hats. There's two of us plus some partners that we have. But I'll handle investor relations. I raise 100% of the capital, communication with our investors. And we've raised in the last 5 years probably, I don't have an exact count, but well over 5 million.
Nice.
It's a per project basis. We're not a fund. We like to keep it pretty deal specific.
So it's potentially new investors every deal.
Potentially new investors. We're at the point where we're starting to roll over investors. The deals in that area, unfortunately, a lot of red tape in those markets. So they take 18 months, depending on the size of the deal. So we're at a point now in our business where you're starting to see a lot of these deals go full cycle, return capital, and then we've got a handful of investors who have come back. And then while those are working, I'm constantly networking, meeting new people,
Right.
who are looking for either cash flow or high growth opportunities.
Yeah.
So we try to match up what we do with them, and if it's a good fit, then
Cool.
we try to bring it to them.
You've not done this your whole life, so let's go back. Well, I always like to ask people, what was their first job, if you can think?
Entertainment, man.
Really?
Entertainment world. I
In
was
high
16
school?
Yeah. So 16 was my first job where everyone was doing like the CVS and the pizza and like those types of like typical high school jobs.
Yeah.
If I can remember correctly, I had friends that were doing like CVS, pizza delivery.
Blockbuster?
Probably. Yeah. That dates me though. Probably all of us.
Be kind, rewind.
Yeah.
Yo, we had one of those rewind machines in my house. You guys have those?
yeah.
Like
Yeah,
next to the VCR, like a speed rewind.
No.
Yeah.
Yeah.
Dude,
That's intense.
Watch Jurassic Park 4 times
Real
one
quick.
night, or Homeward Bound.
Homeward Bound.
Oh,
Remember?
dude.
Chance.
Classic.
Sassy. Great movie.
Classic.
We'll
So
put the Homeward Bound soundtrack on here
Yeah.
at post-production.
you're the king of like little sound bites. I do remember that about you in your DJ world. Yeah.
So your first job, entertainment, what do you mean? You're like
So I was
a dancer?
Yeah.
Love
that. Yeah. So
What was the first
I was
company
an
you
exotic
worked for?
dancer. And,
Exactly.
I was working for a company called City Sounds Entertainment. They were out of Staten Island. He actually did my bar mitzvah.
That's where you grew up in Staten Island?
I didn't grow up in Staten Island. I grew up in New Jersey. I grew up in East Windsor, New Jersey, so Mercer County, Central.
I feel like Staten Island was like the mecca of entertainment, though.
It was like
That's where the most badass companies are.
I don't know anymore. Back then, yeah, I would say this is probably 2003-ish because I graduated high school 2005, 16. He did my bar mitzvah. A guy came back around doing everyone's sweet 16s.
Yeah.
We were dancing. We were a little bit more mature. Asked me to work. Started off as a dancer and then did that for years. Went away to college. Came back. Started doing it again. I was sort of doing it throughout college and then started emceeing. Okay. And so I've been in that business for 22 years. Long time. And now it's I still do the emceeing stuff.
Yeah.
Which I don't really share too much on any like social media. Because I get to just show up and make my money and go. But it's been a great thing for me while I'm building a business.
What did like emceeing like teach you early on?
People skills. I would say that's probably the most important like soft skill that you can learn. The numbers and being smart with the books is important, but I think my skill set has been with being able sort of translated into investor relations. Right. So building rapport, being able to engage a crowd, being able to control a room. That's I would say really helped me.
That was like your introduction to sales.
To sales, which is, once I got into the real world after college, full-time job was marketing and sales.
I tell Greg this all the time. Like, it's scary. These young kids, they're afraid to speak in front of each other.
I can only do it by text. No, you gotta be able to like.
That's why like theater arts is like super important. Well, some people think it's like nerdy, but if you could stand on a stage, and just deliver a message without like falling
and like freaking out,
freaking out, like it's a skill you have to like hone in.
Controlling a room is gotten me. Not that controlling a room may be the wrong word to use, but not being afraid to
reading the room,
gauging the room. What does the room need as an entertainer? And then even just in casual settings, I think people feed off energy. So when you come in, like if you want to be successful, you need energy. In everything. Like you need to come in. We had a great conversation. You had great energy. Everyone in this room had great energy. They welcomed me. That makes this podcast even better. When I walk into a room, I try to bring the same thing, whether it's working or meeting with an investor, whatever meeting that is, because people want to do business not only with people they like, but people who just have the energy and vibration.
People do business with people they like. At the end of the day, you could know every statistic in the world, but if you're not likable, you're not going to go far.
And trustworthy.
Yeah,
that's also it's huge.
Trustworthy, and I think it translates. I just saw something on social media earlier. It's like be quick to respond, and not because the people who take the longest to respond, to type the perfect answer or email, the people who respond quicker, even if it's not a perfect answer, build trust faster. Which is energy, translates to more success, better relationships, better trust.
Even if your response is, "Hey, I'm on it," or "Hey, I'm in a meeting, I'll get back to you." You don't have to have the answer,
right? They like, and especially in investor relations, like, and you guys, you have customers. You're dealing in residential. You're dealing with emotional buyers.
Yeah, for sure.
Like they just want to check in with you, probably sometimes. Yeah. And if they don't hear,
just
a few times, if they text you, this morning at 9 a.m. and you don't respond until 5,
right?
What the hell's going on?
Yeah.
Right. But if you give them a little bit, like, hey, I'm on it. I'm handling a couple things right now. That's all they want to hear.
One of the biggest takeaways I learned from our former CEO, Sharon, was to set up a day in your calendar each week. For me, it's Friday. I call it the review preview day. And it's not even me calling them. It's I'll record like a Loom video of like, here's what happened this week and here's what's going on next week. And just give them the steps, especially for listings or buyers that are under contract. Like, hey, we just did the inspections yesterday. It's going to take 2-3 days to get the report. And then we're going to meet and go over what we're going to ask for.
Awesome.
Right. So just kind of like setting expectations, I think is really important. And like just having a process in general,
a process like time blocked. I feel like you're good. I feel like you're, from what I've seen, like you're good at that and what you've.
I have a full calendar. I don't know if I'm good at it, but I'm trying.
That's it. But like just touch points, it's super important.
So if you could go back to your first job, what advice would you give yourself that maybe you like did something incorrectly in the beginning and focused on the wrong thing? Is there
Don't
anything
wear
you
that
do-
stupid dancing outfit that he made me wear. No. First real job.
Yeah.
What would I go back and give myself? I would say it's a great question. I don't know if I have an exact answer.
What
to
was
that.
your next job after MC?
So I graduated with a marketing degree,
Where'd you go to college?
Westchester University in PA.
Hell yeah.
So great time.
Yeah.
Very fun.
How many people would go there?
It was
that a big school?
It's like 13,000 undergrads, so not huge.
Okay.
Oh, okay.
But like perfect. Like
Yeah.
big enough where you could avoid people, but also small town vibe where if you wanted to see someone, it was easy to.
Yeah, yeah.
Where you go to like Penn State and you're like, it's a whole city and
It's
you
far
got to take
away.
a bus to get to the girl you you want to, or the
How
friends.
far is
you-
Westchester, PA from like, you know,
It was-
Jersey City or whatever?
From Jersey City is probably an hour and 45, but
Okay.
I grew up. I grew up from, my parents lived about an hour and 20 away, so
Okay.
and far enough for them to not
That's the
show up.
biggest thing,
Yeah.
right? You're not gonna be like,
They
"Pop
couldn't
on
just
by."
show up.
Yeah.
yeah. Not
They had
that
to
my-
really think about it.
Yeah, they had to give me a heads up.
Yeah.
But my first job at a school was a marketing job. I would say I would have probably tried to go a little bit bigger earlier. Think bigger earlier. I've always had like I wanted to be a business owner. I just
Yeah.
didn't know where it was. In retrospect, I think a lot of people say this, but if I could have just gone a little harder earlier
Right.
and was thinking bigger earlier, maybe got into real estate earlier,
Yeah.
learned it a little bit earlier, I think I would have been further along. But
Do you think by doing what you did already actually made you better at now versus doing it earlier versus like having the other experiences to actually springboard you to where you are now?
yeah, I think you can make that argument. It's like, I'm a big believer. Your journey is your journey. Like I'm on my path, my timing. There was a reason why it took the years it took to get there. I'm 38. I've been in real estate for almost 9 years.
You're young.
8.5, 9 years.
How old is he? 38?
38.
What?
Yeah.
Damn.
I'm young. I love you, dude. I love that. We're the same
I'm
age,
pushing
though.
39.
Okay.
Yeah, I was a little older
Yeah.
when I graduated high school.
You were 04.
I did pre-kindergarten twice.
Overachiever.
You couldn't use mom. The noodles wouldn't glue. Wasn't my fault. There was a lot of humidity in the room.
That's
They were
hilarious.
just sliding off the paper.
You use that rewind machine.
Yeah. I was just rewinding Jurassic Park every day. Not focusing on my studies.
Yeah. I forget where we were at.
So that your first job, didn't you work at a website company?
So I did. I was part of. Yeah.
Remember you did my dad's website?
I did. No, I did that and JB, the first JB Pro Live
shit.
one, which was probably terrible.
Yeah. Might still be using it.
Might-
No, I'm just kidding.
Yeah.
No, it was
So-
better than what we had.
So yeah, at the time, I mean, it was like when you needed a website. This
Yeah.
is, damn, we're aging ourselves, bro.
This is like 2012 or 13.
It has to be. Yeah. So it was marketing. Left that job. I wasn't at that firm long. The sales
Okay.
website company. I was there like 3 months.
Oh, really?
And it's because someone like tried to get me hired. They couldn't really afford to bring on someone else, but they like squeezed me in because they wanted to see if
Right,
it worked,
right.
and it just didn't. Thank God, because that kind of pushed me into more sales though.
Right.
And then I got into the city. I was doing marketing sales, event sales, which correlated a little bit with my event life. So I started to see things merge
Yeah.
together. Some skill sets starting to come together and like blend, which was cool. So.
You were doing an events company in the city?
So it was a marketing company.
Okay.
They had sponsorship and marketing programs, both digital and in person. So
Yeah.
we were selling, what's the old marketing? Basically programs that allow people to access and get in front of like CIOs and CFOs, CMOs, technology companies who were selling products to those people. And so we had the database and the events, and we would host the events to put those people in the room.
Perfect.
Oh, cool.
And then do the digital marketing stuff, the email blasts. I mean,
Got
this is 10 or so years ago.
2015s.
Yeah, 10 years ago. Yeah, almost.
Time
So
flies.
time flies. But it was good. And then left that, wanted to start my own marketing agency, and then that didn't work because the person I was supposed to partner with just didn't care to do anything. And then simultaneously I started working with someone who was flipping houses, and that got me to.
So what initially caught your eye, like with real estate investing? What was your early like inspiration? Were you watching like Property Hunters or Property Brothers or?
Probably all of that. I mean, I think it goes back to like, I knew I wanted to own my own business, didn't know what it was for a while. In my mid-20s, started to like read all the books about like, I wanted a bigger life. I knew I wanted more. I knew I didn't want to
Rich Dad, Poor Dad, or?
Of course. Yeah, of course. I almost even hate bringing that up because I feel like it's
such a cliche.
But it is important because it does set the
it's a mindset shift.
Exactly. And it's like when you're in your mid-20s, you need that if you want something to kind of shake it up.
Mm-hmm.
I knew I didn't want to do the 9 to 5 forever, and it just wasn't for me. So I started reading the books. I learned a couple things. There's a couple great books that shifted that for me. And then I bought my first property at 30 with my cousin. It was a rental property.
And this is before you own a property yourself.
Yeah.
Wow.
Yeah.
See, a lot of people do it the other way.
That's the wrong.
That's the wrong way.
That is the wrong.
I like the way you did it.
So let's talk about that.
Yeah.
Let's talk about that because I have so many friends that think buy the home first, buy the home that they live in first, buy the home that they're going to spend the rest of their lives in, or maybe it's their first primary home.
Yeah.
But they put $200,000 down.
Yep.
$150,000 down when maybe it was a little bit cheaper
a
few years ago. But now they have that money tied up. Cool, you have an asset.
Yeah.
But that asset doesn't pay you monthly, or that asset doesn't. It grows in appreciation and value. But you've locked up $150,000 that now really isn't paying you every month.
Right.
You're paying it every month.
So is it an asset or is it a
not
liability?
Anymore? It's a liability. I would put it in
with
the liability.
maintenance and everything else.
Yeah, I would personally put it in the liability category.
So you're in the Grant Cardone
for
school
sure.
of thought.
Not everything he says.
Yeah. Okay. No, I'm not saying you are.
Yeah. No, but I do believe in that because I think the American dream has changed.
It definitely has.
I think you don't get rich off your home anymore, right? So if you're creative and you want to, it's not for everybody. I think it also comes down to, this is the main thing: what kind of life do you want?
Right.
Build your investments in your business and your whatever you're doing around the life you want. If you're not an investor, if you're not a risk taker, buy the home.
Yeah.
If you're cool with making 70, 80, 100K a year, buy the home. Don't go crazy. Keep it safe.
So let's talk about your first deal.
Yeah.
How'd you find it? Well, do you remember any of the analytics on it?
The rental property?
Yeah.
So the rental property was bought before I even was doing what I'm doing now.
Okay.
2 families, so the numbers were fairly easy, right? What's your mortgage, your taxes, your insurance?
What market were you in?
North Bergen.
Okay.
So North Jersey.
It was a 2-family?
2-family. I was living in Union City, which was like neighboring town. And it was my first jump into just rentals. I always wanted to, at that point I was just like rentals. I had a great paying job. I was making, New York City money. Yeah. And I'm going to buy a rental property every year with, every year. We're going to do this every year. Great. It's pretty aggressive, but thought I could do it.
Yeah.
You
had a partner on your first one?
My cousin. Yeah. Because she's the only one that would take the risk with me at the time. And
so you didn't do like an FHA?
No, we did 20% down.
Wow.
We did. We bought it turnkey. It was done. It was flipped.
Okay.
So it was renovated. I wouldn't necessarily do that now.
Yeah.
But getting yourself into that space,
get you in the game.
It's a very nice, easy, warm.
Get you in the game. Get you in the game. I think is the biggest thing. Get over the hump. The law of the first deal.
Right.
Write the first big check.
Yeah.
Get over that fear. I think that's the biggest thing. And so we did pretty good. We held it for 4 years. I put 45 grand of my own money in. We had 80 grand total between the two of us. We bought it for 470 and sold it for 600 4 years later.
Wow.
So we didn't kill it on cash flow, but
you made it on appreciation.
But we didn't lose any money. We made it on appreciation. And unfortunately I had to sell it during COVID because I needed some cash. I know.
It's worth 800 now.
It's probably worth like 7
$1 million now.
It's probably worth at least 7.
Oh, no.
I get the Zillow.
Yeah,
pop-ups.
yeah.
Oh, really?
My mother.
You got to unsubscribe to those.
I know. There's a reason why I had to sell it, and we don't get to get into that. But
sure.
But that's the beauty.
How'd you find your tenants?
Just
did it
agent.
yourself?
No,
you had
agent.
an agent.
Agent. Yeah.
Okay.
Agent. Again, we were new to it, so we're just like find the agent. We wanted to be hands off.
Yeah.
And then
But you did your own property management?
Yeah. Did our own property. We had a little backyard, so we were taking care of that. I learned how, I learned everything. I learned as much as you need to know about a rental property, from like the electrical, the panels, where things are located.
Yeah.
Putting pipes on the inside because we had to move some stuff when things burst during cold weather.
Well, luckily this is mostly flipped, so
It was all done.
yeah, so you didn't have to do a lot.
Right. So it was a great learning, and I think people need to get into those properties earlier in life. Yeah.
Because that's like, I deal with new investors, and so does Greg all the time, and they want to make cash flow and appreciation and everything, day one. But it's like, this is your learning season. This isn't like where you're gonna crush it.
So this,
Right.
this is your learning curve. This is like, go a couple of them, get your feet wet a little bit.
Your college.
And then you start building up. Then you get to actually start.
Yeah.
Going.
Well, you get comfortable. I think you just get over that fear. Once you crack that code in your brain, whether it's buying a business, you talk about business brokering, whether it's writing the first check, like we're buying a primary home now, right? And we're buying all of these things, and my fiance, who it's her first home, right? She's seen what I do. We write the checks, we get the investors, but she's never like written the check for herself.
She wants that luxury,
right? So
she wants that CJ luxury.
So it's scary, and I get it. I was petrified to write a $45,000 check, right? I think people need to just do that sooner, and they'll be better off.
Yeah, instead of buying the expensive car.
Yeah.
A lot of people buy right after. I made that mistake right after college. I'm like, I'm gonna get a luxury car. I'm like, I'm a man.
I made it.
Living at home, driving like a new Acura TSX.
The Mercedes, but you live in your mom's basement.
Yeah, exactly.
I love those memes. You're like, people who are flexing with all the stuff, but you're broke. Yeah.
So what was your next deal after that?
Great question. What was that? So we bought that while I was working in corporate, left corporate, and then I started flipping homes. I was single family. So I left corporate.
That's risky.
It wasn't. So here's what I did right.
Okay.
Here's one of the things I did right pretty early was I left. I took the leap from corporate. I was still working in entertainment, which is why that business was a beautiful thing for me. I was able to build a business, learn the flipping business on someone else's dime.
Right.
An old buddy of mine who I'd met living in the building that I was living in was flipping like 20 homes. Needed help. He was doing it all on his own in like Newark, those markets. And I was project managing. So I went from like,
oh, that's smart,
$150K a year, $200K a year to like
50,
840, like it's like $800 a week. Plus the DJs, plus the entertainment stuff. So it was like a big change.
Sure.
But I was learning on his dime. So I learned how to put a house together. I learned the phases of construction. I learned how to acquire. I learned the numbers a little bit on someone else's dime, and I'm forever grateful.
But that's like your MBA in
correct. You go to school
development.
for what?
You go, exactly. Like
you pay how much per year?
Yeah. So
it's,
I survived it, and we had everything go wrong. We had houses go on fire. We had houses burned down. So I had seen a lot. And then my first deal on my own, completely on my own, was April of COVID. So COVID's 5 years ago at this point.
Dude, that's brilliant.
So we get it. We get the offer down in Brick, Brick, New Jersey.
Yeah.
So we're on Herbertsville Road.
Brick-tucky.
Yeah.
I can't say that. Great town.
Yeah.
No, they say Brick-tucky.
Brick-tucky.
I'm from Toms River. Full disclosure.
Yeah.
Great town.
What do they call Howell? Howell. There's a farm name for Howell too. We bought that. The one in Brick was $190,000.
How'd you find the deal?
MLS.
Get the hell out of
MLS.
here. MLS.
I was putting offers and offers and offers, and I wasn't getting anything. And I was like, I was putting in offers. I'm sorry, I wasn't doing. This was my strategy. I was going to see properties, assessing what it needed, then putting the offers. I was wasting days doing that. I got fed up. COVID hadn't really gotten crazy yet. I saw the MLS listing, put the offer in first based on what I thought. Then when I saw that I was in the game and we were negotiating, then I went to go see it.
Okay.
So I switched up my strategy, which is if you're newer, that might be a good thing. If you know a little bit about rehabs and like what things cost, that might be a quicker way to get the deal and show some seriousness.
Yeah. So you're doing a curb offer, not even going inside. Just to see if you're in the ballpark and worth your time. Yeah,
exactly.
Smart.
Exactly.
Get a higher volume of offers.
Right.
More swings.
More swings.
Can't hit if you don't swing.
There we
Greg.
Ain't that the truth?
I tell you that.
Yeah. So that was my first deal. We bought it for $190.
Kind of looks like Derek Jeter, actually.
Let's go.
He's got the Yankees
Number
hat.
2, Captain.
Swing. Bada, bada.
Yeah. DJ. No, you're good.
Greg, move that mic closer. Quit playing with it.
Okay, how about this?
This is way better.
If I go like this, does it sound terrible? If I turn my head? No, it's
No,
fine.
it's okay.
And the quick numbers on that, where we bought it for 190, I believe I put 110 into it.
What the hell's 190?
190,000. It was a rancher.
Oh my god.
It was a rancher. Completely
What
gutted
year
it.
is this?
This is 2020.
2020?
April 2020. So like that first like 3 months, things were like I need money. My job is gonna go away. So they're like
There's some fire sales March to June.
Crazy.
Right?
So I didn't go under. I got the accepted offer in I believe in February of 2020. So nothing's crazy yet.
Oh.
Right. Then we're supposed to close like in March. Things started getting a little shaky. The banks freeze.
yes.
Wow.
And so I had enough money at the time. I didn't have a lot of money, but I had enough. I had to bring like maybe 20 G's to close. So I was gonna do it myself, bring no investors.
Nice.
Banks freeze. Hard money changes, all the terms change. It goes up to like 60K. Now I need to bring because for whatever reason, like the LTV changed.
Sorry about that.
Which again, I wasn't making a ton of money. I was project
Right.
managing. I left my corporate job.
Yeah,
And it was at this moment, and I like this story because who the hell's gonna give me another 50 grand or 40 grand? My brother gave me a little money. I found two other guys to give me another like 40 grand. And that's what I was like, yo, I can raise money. I can raise money. And if I can raise money during this like very tumultuous time, very uncertain time, it's like there's something here. So we got it. We closed early April. COVID's crazy. No one can even work.
Yeah.
We got the house done by September, which is an awful time to sell.
Awful.
But we got it done because it's back to school.
Yeah.
I hate it, but I feel like I always have a house
It's
to sell.
I don't know. We get a little pop in September, October here.
Especially in 2020. I think it was actually like that's when everything starts coming back up of it's okay. Like
Yeah.
we're able to actually start working again.
Yeah, so we got it done pretty quick. I had my guys on it, and we got it done 6 months. It's probably like the quickest deal I've ever done. Still, we're doing bigger deals now.
Yeah.
But I made like 50 grand on it. 50 grand, and then
you paid the investors out?
and my investors got paid back. It was probably the best timeline that I've ever had.
Oh, wow.
I forget what we paid them, but everyone got paid back, and plus one of my bigger investors on that, maybe he gave me like 30 grand. He's now a $150,000 investor of mine
Nice.
on some of our bigger projects, and he's on our third project with us.
So you were kind of forced by getting thrown in the deep end of like, here I have to create a miniature real estate investment trust, or partnership.
Mm-hmm.
How'd you know like what shares to give out and what the ARV was going to be and all that stuff?
The ARV came first. It was
After renovation value.
Yeah,
For the
boom,
people out
boom,
there.
boom.
Boom.
Don't get confused.
Greg, I got you.
Yeah,
Don't
yeah.
worry about it.
Thank God.
You just sit there.
I was like, what is this?
I don't know.
LTV, LTC, all the terms.
Just chat GPT that
XYZ.
later.
Yeah. So ARV, we figured out, I think it was like we were projecting like 400, 450. So if it's 190, I'm putting 110 into it, plus carrying costs, soft costs, closing, all the stuff. I was hoping to sell for a little bit more. Houses were starting to get a little crazy offers. We listed it for 450, sold it for 400. But I underwrote it well enough to still make like 48, almost 50 grand.
Yeah.
So note to self, be conservative.
Yeah.
Always be conservative with numbers because you never know.
Always.
Yeah.
So I learned that from working on.
If you could do that again,
Yeah.
would you have priced it lower to draw a bidding war?
Probably, I would have done 399
Yep.
and see if I can get. I think I sold it for 410.
See, that's what I'm telling. I'm trying to tell the sellers. I'm trying to tell them.
Yeah,
I price it right.
Right, price it aggressively. Get people in there. You don't.
You know
always need
why?
to
You know
push.
why, Greg? Because
Why?
the market won't let you undersell a property.
It's very true. The market always dictates.
So I tell people, I'm like, we can make your house $1. Somebody's going to offer $1.
That's a strat. That's a thing.
You know what I mean? I know it's like an auction.
No, I get it, really, yeah.
Like people aren't going to put their best foot forward unless they see competition, and there's urgency and scarcity and all that stuff. So it's like such a psychological game, but that was early on where people didn't even really know what bidding wars were.
The bidding wars. I mean,
They really started in 2021.
I feel like. I mean, are they
70, 80, 90 offers.
Are they still? They're still happening in the burbs. Like,
yeah,
right?
depending on the town.
Not as bad.
Okay.
But I mean, you're still getting like, if it's a really good deal, a good price and everything.
Glen Ridge,
20.
Montclair, Essex County's on fire
Yeah.
right now.
Yeah.
let's talk.
All the
business.
people that are moving, They have to get closer to the city because they're going back full time.
Yep.
Yeah.
I just help buyers move from Bridgewater to that area. They do something funny in Glen Ridge. Talk about event-based pricing.
Yeah.
They list them at 50% of ARV and just laugh while the bids come in.
That's hilarious.
Like things go 900 to 1.6.
It's a market.
I'm not even kidding. I'm not kidding. Montclair's the same way. It's like it's so annoying. Like it's like I don't even know what homes
But
to
you know,
show here.
you know who uses that strategy too? I don't know if you guys watched the Owning Manhattan Sirhan thing, that the second season.
Dude, that season was the best.
Did you?
I didn't
binged
watch it.
Yeah.
So it came out of whatever 2 weeks ago.
No,
and-
Friday.
a Friday.
Yep.
So then I watched it. Wow, I'm a sicko. You watched it too,
Yep.
as quick as I did. Anyway, he takes the 12. He takes the
Today
12,
is Wednesday.
yes.
So let
He takes a
everybody
$12 million property that was listed for a long time, slashes it to $6 million.
Oh, the one in Brooklyn? I heard this story.
Was it?
It was Brooke. Go for it. Yeah.
Well, it was 3 different lots, or no, it was 2 different lots. It was a crazy like layout, and it was too big for people.
It's 3.
It's 3.
3 deeded different condos.
And what he slashes it $6 million in the city, like crazy price. Like, how can you get the square footage? So he gets everybody in. Some people feel baited and switched. Some people, whatever, liked it. He doesn't get exactly the offers he was hoping, but what he does then is he basically sells two of the condos, which is now 1 unit, and then is going to go divide the third one. So whatever he was able to get the seller their price by splitting up into 2 different sales.
Wow.
So however it worked out, you're going to piss some people off. Maybe people feel baited and switched, but I mean, he got the seller.
At the end of the day, you're here. Your fiduciary responsibility as the seller rep is the seller,
right?
And you're trying to get to the best possible price.
Super creative.
Yeah.
He was super creative, and it wasn't going how he planned on that, but he figured out how to split it up and ultimately get the numbers.
That's the whole thing too of like, how creative can you be and how quickly can you go off the fly to solve a problem that no one can really know about it and think about
solving the problem.
Yeah. Like he did all that in his his bedroom. His
shower.
His shower. And then in the closet.
That's a little
and
much.
It was like done.
That's a little much. Ryan, come on. We don't need to see you showering.
It was like slow.
They got shower cams on that show? I haven't watched it.
And the agents that we work with, I love you. We just they're Sirhan guys.
Yeah.
And we're actually going into the office tomorrow to
cool.
We're getting lunch with Alex and Jared, who are our guys. They work for Sirhan. So Ryan, come on, coming to see you.
You owe this guy lunch.
Yeah.
Yeah. You know, with that event-based pricing too, just like last point is what that does too is it gets people in the door that otherwise weren't coming. You know, and you can't get offers without showings.
Right.
You can't get showings without urgency and interest.
It's emotion. You need,
So
need people emotional.
Yeah.
You need people attached to the home.
Especially the resi side.
Yeah, especially.
And if
the
you
resi
can
side.
get people in a place and bumping into other people and like, what are they doing here?
Yeah, because now they want to compete.
Yeah.
Too.
Now it's like, oh,
Exactly.
there's something sick.
Hold on.
I can't let Sally get this.
Exactly.
I need this.
What was this, 1970 Sally?
I don't know. You said it.
No one's here is Sally, right?
No.
Okay.
No.
No one's mom's name is?
Not that I know of.
Yeah, Stacy. But
What do people kind of often misunderstand about real estate investing or developing that you've seen, or maybe you misunderstood at first?
There's just inherent risk, I think, in investing. Stock market with your financial advisor, there's risk.
not guaranteed.
It's not guaranteed. And if anyone's telling you it's guaranteed, run.
Yeah.
Right.
This is like bonds or whatever. Like,
Yeah, I mean, look, I've had some. I've had some non-real estate things personally go wrong that I've invested in, and I have a mindset that understands that, like, damn, well, that sucks. I'm pissed that it went wrong, but it's part of investing. I have to be able to eat that and understand that's just part of it. I took a risk. It didn't work out, and some people never invested again after that particular situation, and they weren't able to handle that. And you realize then that they're not investors. And so what I took from that particular situation was that I go into conversations when I'm talking with investors to make sure that they know and fully understand. Some of them are accredited, so they know, they get it. I don't have to do this. But for the newer investors who've never written a $50,000 check, because that's our minimum, that they know what they're getting into, that making sure that the $50K isn't all you have. It's not all your money.
Yeah.
That they understand that while we're operating at a very good level. Our intentions are right. Our intentions are there. We're good operators. There's macro things that can go wrong and affect the sales. You know, we can go over budget. Like there are things that can happen. You know, so I think there's inherent risk that if you don't have the appetite or the mindset to be able to deal with delays or potential losses, then hold on to your money.
Yeah.
And if you're trying to be an investor, here's another piece of that.
Okay.
Right. If you're doing multiple deals, people do multiple deals with us. Investors are now on their third, fourth deals with us. There may be a time at some point in our lifespan of working together where maybe you don't make any money, but you've done 4 other deals with us that have made money.
Right.
So as an investor, I think you need to understand why you're investing. If you're a long-term investor, understand that, you know, if you're an investor of mine, this is a partnership. I see you as a partner of mine. Not everything's going to go perfect on every single deal, but if we're in this together, we can trust each other that the majority of our deals, 75, 80, 90% of our deals are going to go right. So if it's a long-term play, it's a long-term relationship.
Yeah.
I think you have to have that mindset, because if you're just doing one transaction to be one and done, like, first of all, you're not going to get rich off one deal.
No.
Right. So you really have to be a long-term player. So that would be the advice. I think that was the question. That would be the advice I would give, is work on the mindset, understand what's involved in investing, play the long-term game.
So they misunderstand the timeline, basically. And, you know, I try to remind my clients that it's more about time in the market instead of timing the market. It's very hard to time the market.
Yep.
You know, I don't know if anyone's done that, you know, successfully, even in stocks, right?
No.
So,
and you know what's funny about, like, you know, like financial advisors who are maybe moving stocks around in your retirement funds or trading for you. You know, if you lose money in the stock market, you're not firing that company. You're not firing that financial advisor, right? But in real estate, going back to like my long-term thing, like one deal is gone, and even though we did everything right, maybe we just misprojected, or there was a COVID, or there's a market correction, or whatever reason, they won't work with you again.
yeah.
Right. But you're going to keep investing in a company that you have no clue who you're investing in. You're gambling on Bitcoin. You're doing all these things.
Yeah, that's okay.
Yeah, that's okay. You're taking all these risks with people you don't know, don't trust, never had a lunch with, never had a dinner with, never even jumped on a phone call with, but you're quick to not work with someone who, like, maybe got your capital back, didn't lose you any money, you know? So I think there's a lot that goes into it. I think you just have to be mentally prepared.
Let's talk about a couple things that probably new investors will be interested in. How do you find your next deal? Number one. Then I'll have a follow-up
Guys
question.
like you. And you.
Oh, thank you.
It's gotten a lot easier over the years. You do more, you get more attraction to you, more momentum. How do we find our deals? So it's a combination of, I do a lot of networking. I go to a lot of lunches, a lot of dinners. I get in front of as many brokers that I can. One thing we haven't done a great job at is like direct to seller. We're also not like a high volume company. We don't want to do 30 deals a year. We want to do 4 to 8 really good deals a year, which are juicy.
It's like one a quarter.
1 a quarter, but then
I did the math.
Yeah, but then you get them rolling, right? And so like it takes a couple years. So we're entering a year 2026 where like we have multiple deals that are closing, but 24, 25, maybe you don't have that because just the way 18 months, like it just may land in the 2 years after you acquire it, calendar year. What was the question?
How do you find your next?
So brokers, wholesalers. We've done a few direct to seller that we've gotten.
For people that don't know, what's a wholesaler?
A wholesaler is, say I have a deal, right? But I don't want to list it on the MLS or a commercial. It's a commercial property, and a lot of people would rather just give it to someone who's got a network of buyers who are willing or want to buy a warehouse or a commercial space or a restaurant space or even a residential home, a 2-family. There are, instead of having it put on the MLS, they bring it to, let's say I'm a wholesaler, a guy like me who's got 10,000 buyers investors who can act quick.
Right.
So say I'm selling a property for $500,000. I'm the seller. The wholesaler will get it under contract for maybe $550, and he sells it for $550. And he makes his $50,000, right? Maybe it's done in a month, right? So it's a quicker way to get in front of investors. Investors love off market deals, so that attracts people. They don't have to necessarily compete with other sort of standard buyers,
right? So they basically, wholesalers are getting the contract but not the asset,
correct?
And then they're reassigning the contract,
flipping paper
to an investor, making the spread.
Investor, yeah, no, they flip. That's an even better set. Like they flip the paper, which is great. I've done a few of those myself when we're at like capacity. We don't want to take on a new deal, but like we're still getting deals sent to us. We just did one. We made $20,000 on flipping a piece of land. It was a weird piece of land, but we found a buyer for it. He'll build new construction. We made 20 grand on it. We did like, I don't know, 30 days worth of communication.
Yeah.
Setting it up. We brokered the contract, and pretty easy. Not our game, not generally our game, but like if I can do 5 of those a year,
it's not bad.
5 or 6 of those a year. Plus, it's not a bad living. Now, there's some wholesalers who are horrendous. Horrendous. Don't know their numbers.
Yeah.
Or they tell you that they're actually the sellers and actually lie to you because they're not actually licensed. There's no real guardrails for them.
Right.
So you got to be careful with like wholesalers. But some of them are really good.
But
a lot of them are not.
Yeah. I think in my early days, it was a lot of garbage. There's commercial ones. There's residential ones. The commercial ones, in my experience, have been pretty good now, at least, because you have to know your numbers. Because commercial investors it's a numbers game. It's not as emotional as a residential. It's treated more as a business.
Right.
So I think the people on the commercial side tend to be more business oriented than the residential side.
Yeah, we definitely see that.
Yep.
Yeah. It's more
on
matter
both
of fact.
sides. On both sides.
It's more matter of fact. Do the numbers
Black and
pencil? Do they work or not? Do we? No one's like super emotional about it.
And then follow-up question to that is, how do you keep your numbers in check and change orders down while you're building and budgeting? Like, how do you do that?
Yeah.
Because I've done a few, and we just always go over budget for some reason.
You always go over budget. And it always takes more time.
So you have to build that in.
We do a pretty good job of building that in. We've gone over significantly on some projects in terms of time, but we had a very bad partner, and we're still kind of dealing with that. But our model is set where Chris and I are really good at finding deals. We're good at analyzing deals, underwriting deals, funding the deals, finding the private capital, and getting it to the closing table. What we've built out for ourselves is then partnering with a builder, right? So then they handle all things construction. On these bigger projects, Chris and I's knowledge of construction only goes so far.
Right.
But we do this for 2 reasons. It only goes so far. So like our expertise when it gets to structural or doing significant square footage value add, we only know so much. And so what we found is part 1 is, where was I going with this?
Partner with your contractors?
So we partner with our contractors. So they have skin in the game. That's part 1.
That's interesting.
Right? Vetted, trusted. We've built relationships. We don't do that right off the cusp. We just meet you and then decide to partner. Right. You have to have that experience. And why we do this, skin in the game, same goal. We're all aligned to the same thing. You're not getting paid on a markup. You're getting paid at the end, just like us. We'll take a couple fees. We'll build in some fees to cover overhead, cover our cost of living, which most developers and operators do. But they don't get paid till the end, right? And we also make them front the first phase of construction, right? So the golden handcuffs. And it's worked for us. And so basically when you're handling overages or change orders, they're not upcharging you, right? And you're in it as a team. And so we're able to minimize that part of it.
Okay.
And then Chris and I are able to then, if they're just handling construction, we're then able to continue to scale our business. And so I think the 2 things, right? We only know so much about construction, so it's great. Let them focus on construction. We handle what we do. And
you stay in the office.
Specialization.
Yeah.
Right. We're big on specialization. Build a team around you. Everyone, You do sales, you do construction, we do the deals, analysis, finance, etc. And I'm having a brain fart right now. The second part of that was basically going to be construction. They handle construction.
Partner with contractors.
Yeah.
And then do you buy material like in bulk in a warehouse or anything?
No,
Or
no, we don't.
does every flip the same stuff?
No.
It's
So
all
if you go to
different.
CJ Investment Group, personal, no, we hire a designer. So again, specialization. We hire a designer for those projects. We don't want to think about buying tile. We don't want to think about, again, we're doing a downtown Jersey City project. We just got the design packet. $2 million condos, $2.1 million condos. I don't want to worry about the design for those.
Yeah.
My brain doesn't go there. I want to focus on investor relations. I want to focus on raising capital and then overseeing the entire project. I want to manage every piece to the puzzle.
Do you give the designer the budget, or does the design drive the budget?
A little bit of both. There's the challenge.
Because obviously
She's
golden toilets add up. You know?
but bidets for everybody.
Dude, those toilets are like 10 grand.
Yeah. They're crazy. So designers naturally they're gonna go over.
Yeah.
We do send them our budget. We'll pick things. They'll give us like 2 or 3 options. We'll pick things that fit within our budget. But this goes back to our style of just like, we are pushing numbers. We are pushing a premium product. We'd rather overspend and make it really, really cool.
Right.
Because there will be a buyer for it, right? Cool product. And that idea, that concept for us started when we entered Jersey City and we saw a lot of projects sitting. They were all cookie cutter, builder grade.
Gray LVP.
Gray. Everything was gray.
Gray and white.
And it was very uncertain. And so like in any business, if you have a premium product,
Right.
you will have a premium buyer. And there will be a buyer. So we took that concept, and that's pretty much been our model for most of our projects.
So you're kind of creating your own market based on design.
Design, right.
Do you use the same designer every time?
Yeah, for the most part.
Wow.
She's been great. Expensive, but it's part of it. We build it into our costs.
She knows what she's doing.
Yeah.
You know?
She's been really helpful. Again, it really comes down to like specialization. Us, like Chris and I, can scale our business. We can continue to find deals because we know construction's handled by trusted people who aren't going to rob us, upcharge us, overspend, mismanage. Like, we know those guys.
Yeah. Also with technology now, you can walk through a property before it's even built, right?
Right.
Like the designer, I don't know if she does this, but can make a CGI rendering of the space, and you guys walk around and be like,
Yeah.
dope.
The team, I think it's really team is what I would preach. Is for a while, Chris and I were trying to, I think we've talked about it. The couple that you flipped, right? And I did it in the beginning. Like, I'm picking all the design, and maybe they're like just a little bit more on the basic side, which is fine. So you don't really need a designer, but if you're trying to scale your business into a more premium product, you just need it. You just need it. It frees you up. Even if you're paying 10 grand, 5 grand for someone to come in, tell you where to get it, give you all the links, you click purchase, you pay for it. It just frees up your mental.
Yeah.
So also, like, how much is your time actually worth?
That's it.
Are you down here? Or are you trying to only like stay up here with? Yeah.
Right. That's everything. So I think in any business, like, focus on what you're good at, bring on partners for everyone else around you. Right. And then you can grow. And Chris and I have, I don't know, we have 8 projects right now, $20-ish million worth of real estate.
Nice.
Good job.
Not that we're going to make $20 million, but the value of it is
But soon you will, though.
Yeah, soon. I mean, we're on the path, and
What's next for you guys? Are you looking to keep doing more of the same, or you want to get into like high rises, or what's going on?
high rises is definitely on the map. We're getting there. We're starting to submit offers on like 60 unit, 50 unit stuff.
Nice.
So more on the commercial side. I don't want to make the mistake though of saying like we've done a few years of like the luxury condos and now we're getting out of it, because I think it's in the markets that we're in, it makes sense. We're good at it. So that'll always be an arm of our business until the day where maybe our commercial and our commercial development business just takes over.
Yeah.
So we're not going to leave that. Our investors like that. The commercial investor, the investors we need to bring on for a 50, 60, 70, 100 unit building.
There we go.
Completely different investor.
Yeah.
Whereas my 50K, 100K, $500,000 check writers, investors,
It's a different ballgame.
Those are big numbers. That's a lot of money. But with the condos, they're done in 18 months. They get their money back. It's high growth. 18+% is what we try to target. 18% annualized. But with commercial, your money's probably going to be locked up for, expect it for 3 to 5 years before a refi, you know? Those are smart plays too. It's just a different investor. So we're working on getting to more of those. We have a handful of people that we are working with now. It just takes time. So
quick question. With your flips that you do, is interest accruing in the background?
Oh yeah.
Okay.
So yeah.
So the investors get that back, you know, at closing when you flip it.
Yeah. So they're getting their principal plus
profit plus that.
Okay. Yeah. So what we normally do is a pref and an equity split. We restructure. We used to do a flat return. So I think you actually asked me this in the beginning.
Maybe.
Of on the brick flip, what I paid them. It was a flat return because that's how I knew at the time. That's all I knew. It's like, give me $100,000. I'll pay you 15% flat return.
Right.
However long it takes. And it worked out well for a while. But as we got more sophisticated and had to restructure things and longer deals, more expensive deals, we now do a pref. So it's basically like called a 12% annual pref that accrues over the course of the project. So a point a month.
Okay.
Right.
Got it.
If it's 18 months, 18%, plus based on their investment amount, they get a piece of equity. So now our investors are tied and have a share of the entity that holds the property. So they're more collateralized, more security, and a little bit more predictability. So we try to give them the best of both
because they know
worlds.
they're going to make at least the interest.
Right. They're going to make at least the interest, right? And the preferred return gets paid first. Now, the equity is based on, you know, how well we perform, right? Does the project go more? Then cool, everyone makes more. If it goes less, then your equity is a less dollar amount that you're going to make. But the idea is that, does the deal support the pref, right? That way we can at least pay that out.
Got it.
So we've been structuring it that way. There's some variations to the splits on equity, but it's been working pretty well for us.
If somebody wants to invest with you, what's the best way to reach out?
Call me. No. Social media is great. I usually get a lot of messages there. My personal, my business is CJ Investment Group on Instagram.
Okay.
And then personal is J Silvy.
Got it.
JAYSILVY.
He's wearing a tux in his picture, I think.
I am wearing a tuxedo t-shirt.
Tuxedo t-shirt.
Even better.
Yeah.
It's hard to get this guy to wear a shirt.
It's hard, yeah. Yeah, but I like to have conversations. I like to meet with people. I love to have investor conversations. I like people who do cool shit.
Yeah.
Different stuff. It doesn't need to be real estate. I thrive off of people who are of a similar mindset.
Yeah.
So.
Well, appreciate you coming on, Jay.
This is awesome.
It's been awesome.
Thanks, Jay.
Energy. This studio is awesome. Very, very cool.
If you'd like to invest with Jay, just hit him up, CJ Investment Group or Jay Sylvie on Instagram. And if you need fashion advice from either me or Greg, you can slide in our DMs as well.
Yeah, I love it. You guys are the best.
All right, thanks, guys.
Thanks you. Bye.
Yeah. That was fun.